So the big thing why I wanted to have an audio note today was to talk about lumpy returns. I would say that term, lumpy returns. What does it mean? This is a great way to illustrate that. My personal portfolio this month has done very, very well. We're up over 30% month to date. I'm not bringing that up to boast. I'm not bringing that up to brag. I could really care less when it's up or down. I'm just trying to teach and illustrate you guys how this works. So most of the year, it's been the beginning of this year was great. And everybody, we all were a part of that. Everybody sees the trades. I'm telling everybody what we're doing. And there was a bunch of people signing up at that time for this service and going, okay, great. And then when the summer came, I said, hey, we're not going to have a ton of trades here. And a lot of people did drop from the service, which is also fine with me. I'm not trying to make a FOMO environment where people are losing money day after day because I want to put out content to get more subscribers. I love having subscribers. I love that you guys support it. It lets me put out information from real traders directly to you guys, from my own portfolio strategies directly to you guys. And I love talking with you guys. Um, However, I know there's some people who get into services like this, and the only reason is to get new trade ideas all the time. And what I'm trying to do here is teach you how to make money. There's a difference between trade ideas and making money. And at the same time, there's a difference between being right and making money. Meaning being right is hey, the market's going to be up by the end of the year. Making money might be, hey, the market's going to be up. I got a trend signal to sell in the end of December. I sold it. We made a good trade. That's the difference. Or it could take you 5 times to get it right. Hey, I bought the breakout in this, 3 times once in September, the next time in October, the next time in November, and on the third try, I took a 1% loss in my portfolio twice. Then the third try, we made 30-40% on it. It made a 10% gain for my overall portfolio or something like that. That's how you really do this well. And that's the difference between being right and making money. In lumpy returns, you have these periods like now where it's like, okay, all summer long, and you guys always ask why, if I always say don't trade in the summer, or you can trade through it, there's only two different things you could do. You could trade through it, or you could stop trading. And people ask, why do you trade during the summer then if you say that? Because I always say the same thing, because I want to be prepared for that next move. If I'm just in cash and I take a break from until November, like when am I putting on new positions? Do you just put them all on in November? What if there's a crazy move like this year? We had good moves in October. We made a lot of money in October. So how would you do that? How do you set that portfolio up to be perfectly in line with the trends and the strategies if you're not continuing to put on the trades? Now, granted, if you're a person who's just trading one product at a time or something, like, sure, you can do it differently. If you're trading one product at a time, you can come in and be like, okay, well, I'm going to just trade during these time frames, and this is how I do it. And once again, this is just how I do it. If you do it differently, great. But how I do it, I want to be positioned correctly for that next trade every single time. And this year, we were positioned very well for a trade. And this created a very lumpy return getting into the after the November election. And so, what I mean by lumpy returns are, if you're having months and trading, for example, 2022, we had a 30% return in Q1. It's a really great return, especially because the market was getting hammered at the time and nobody else was making any money. And then the rest of the year, the only trades that were really working were the bond shorts. I had some currency shorts, but everything else was just getting chopped up to death. So it was basically flat, slight gain, I think, in Q2, loss in Q3, and a basically flat. I think we were slightly down in Q4. I think it was like 1%. So basically, if you're looking at all that and going, okay, well, how why would you trade like that? Why do you try to catch these major returns at these certain periods of time then? And the reason is you don't understand when the market's going to move. Like, I know most likely the market is going to make a big move in November after the election, because that's how it goes. I know that the October has a lot of bottoms in it, so I might take a trade in an October bottom. I know these things. These are the things that I actually know about the market. But do I know what's going to move, how it's going to move, if I'm positioned correctly? No, that's where the price signals come in. And this creates these lumpy returns, because then you're in all of these trades and you're putting on these positions. And let's say energy gives you a signal and you're in cocoa, you're in coffee, you're in small caps, bank stocks, and then you're shorting bonds, um, you're long crypto, Bitcoin, Ethereum. As that trade kind of comes to fruition, now you've made a lot of money very quickly because 80% of your trades are working. Basically, gold and silver and the precious metals didn't work and everything else kind of worked. So now you're really making money when you got 80% of your trades working. That's what you're kind of going for here. You're not trying to be right on every single trade. Like you're not going to be right more than 50% of the time. But what you can do is during certain periods of time when you're really, really right, when everything is working in your favor, you can really capitalize on that by being diversified. And you have those crazy returns during certain months, certain quarters. We had in 2020 was the craziest one because it was the most liquidity in the market's ever seen, basically. 2020, we had 50% month in November, and then we had almost 60% month in December in 2020. So once again, there's the difference between the two of these things, right? So you have to understand that, like, you might have flat periods, and that's okay, but you have to be able to just put your head down, keep putting on the trade, and not caring. And the more you're able to put your head down, put on the next trade, and not care about, like, this guy over here said he's having a good return and I'm not having a good return, the better off you're going to be as a trader. And so as we kind of go through here, we're looking at politics. So, or sorry, it's not politics. We're not looking at politics at all. And I've posted this. I've said this many times. I'm an anarchist. I stay away from politics. I'm really not a big fan of it, especially when it comes to trading. I'm not a fan of it. I think we'd all be better off spending our time taking care of ourselves, and the people that we love around us, and trying to be good to everybody we meet in our day. I try to be nice to everybody. I try to be nice to the janitor as well as the CEO or anybody in between, because I've been all those people in between. So I think if we focus more on just being good to the world and good to the planet and good to the animals and people around us, we can make the world a better place. But focusing on these things that we can't really control is very hard on your mind, and then you start making bad decisions as a trader. So if we look at things like and I said at the beginning of it, I said, here's the deal of this post, the lesson. Success isn't about boasting, it's about building a methodology and sticking to it. Here's the deal: don't let politics, opinions, or noise dictate your trades. I always say that same joke, and I know it's probably redundant to some people, but I'm gonna say it again. If God came down to me out of a cloud and he said, Jason, I know for sure that your trade in coffee is stupid, and coffee is going to crash 99% tomorrow and you're going to lose everything you have, I would look at God and say, sorry, God, I've got a signal. I'm still long. My trend models are still long. To me, that's the kind of confidence in your strategy that I want you guys to build. And why I talk about things like back testing all these things isn't because it's perfect. It's because it builds that confidence. And then over time, you're trading over the years, and then you're going to build that confidence even more. I don't want you to be confident in any position, confident in coffee, cocoa, sugar, like the NASDAQ, bonds. Like, don't be confident in any of those things. I want you to be confident in your methodology, and that's it. Just your methodology as a trader. So as you go through here, you're going to see the futures year to date. And I think it's interesting that coffee, sorry, I put year to date. I'm going to change that now. It was the last 3 months. Coffee over the last 3 months is number one. So coffee is number one in the last 3 months. Cocoa is right behind it. which is very interesting. I told everybody about the cocoa signal we got recently. I also shout out to Sam Gatlin for calling me out on the show and being like, why do you think cocoa's not going to happen again? And he said, I don't know, Sam. If I get a signal, I'll take the signal, but I'd be surprised. 5 minutes later, I have to text Sam and say, Sam, I got the signal. So that was kind of funny for me. Next one is sectors. 1 month, 3 month, 6 month time frame. So basically here, like, this is what a reflationary environment fucking looks like. Sorry to swear if that offends anybody, but I assume there's nobody's listening to this around their kids. If so, let me know. I can definitely change that if that's the case. I'd love if more kids paid attention to this. But financials being number one, consumer cyclicals number two, energy three, industrials four. That is a reflationary environment if you've ever seen one. So right now we have this beautiful relationary environment setting up. I've been talking about this thing forever. I know I probably sound insane sometimes. I'm like, reflation's going to happen. Reflation's going to happen. And I keep saying at the end of the year, the end of the year, the end of the year. Now we're finally getting that opportunity to see it picking up. So the 1 month time frame looks good. It looks reflationary. 3 months haven't caught up yet, but I want you guys to continue to pay attention to it. Utilities falling a bit is interesting. Utilities were the ones leading the way where everybody was like, oh no, it's the utilities are changing the game. Like, it's going to be a risk off deflationary environment. You see the utilities. And I kept saying it's a seasonal move. It's normal for utilities to lead. And it's not a bad thing for the market either. And so they started to back off. We're seeing that seasonal move change. But look at financials. 6 month time frame, they're number one. 3 month time frame, they're number two. 1 month time frame, they're number one. That is an environment where the yield curve is coming out of inversion. So I don't think there's any way the yield curve is not going to come out of inversion. We're going to continue to talk about that as we move lower. Please click on the video from Jay Powell. It is funny as shit. Jay Powell is hilarious for this in the first place, but the Wolf of Wall Street part of it just makes it a lot funnier. It's the first thing I thought about when I saw it, and then Kevin Muir beat me to the punch and put it on. Beautiful. He made this. It's so well done. Next chart is natural gas. And make sure to click on the links. Like, I'm trying to put links so everybody can go back and see what we've done. Like, see if I'm telling the truth. If I'm lying to you, fine. Don't. I'm an asshole. But I always try to tell the truth, good or bad. If I'm winning, if I'm losing, I have no problem telling you. It's the reason why the portfolios are there with the losers on it. I could just take the losers off of it, like other people do, but the portfolio is there with the losers. Next chart is 2-year Treasury yield. Oh, sorry, I didn't explain natural gas. Natural gas leading the way over all of these other stocks. So we got ETFs, we got utilities. It's beating utilities. It's beating gold. It's beating the S&P. It's beating the Nasdaq. It's beating the Russell. Year to date. That's really interesting considering it was negative year to date in October. It's a huge move. So it made a huge move up over 30% in a very short time frame. So natural gas, keep an eye on it. We're long it. Our reversal model bought it back in August. Our trend model's long it now as well. Continue to stay long natural gas. And like I said before, I think it's one of the best trades in energy right now that nobody's paying attention to. 2-year yield chart. So I just want to kind of point this out. These trends are, this is not that rare for the 2-year yield to kind of move against it and call bluff. But it is a reason why they're gonna have to start to cut rates. I've never seen it happen this early. I've never seen it happen on the first rate cut ever. So the first rate cut happened, yield started to bounce. Now, once again, it's the same thing I said before. If you click on the link, interest rates have actually risen where that's at. You'll see that that's where I wrote about the Fed made a mistake the first time I pointed this out. So definitely take a look at that. NYSE, new highs to new lows. So new highs versus new lows is something I out of all the breadth indicators, singular breadth indicators at least, I like to pay attention to this one. It just kind of tells you what's going on. Like if we're seeing a lot of new lows, like the market's going to come into some pain at some point. Look at 2022. We're seeing a lot of new lows. We started to see more lower highs on the new highs list, which is the black bars. And we started to see the new lows tick up right at the end of 2022. That then turned into a massive drawdown in 2022 that shocked the market for 9 months basically. And also when we're below that 200 or that moving average there. So when we're below the moving average, that also is telling us something. Right now we're above the moving average. The market's looking very good. Everything looks strong. Breadth is wide. The NYSE is a very wide index. So if that's making new highs, I'm not bearish by any means. Next chart. Is it still a good environment for gold? Yes, I absolutely believe that. Buy dips and ride the trend till the end when it bends. That's the truth. Can't say much more than that. I will continue to try to put out things about gold and silver miners and random things, but the general gist of it that I want you guys to pick up and take home with you is that gold miners are going to move. Gold miners are going to move. They're going to make a very large move, and a lot of people aren't going to believe how much they move. Everybody's going to look at crypto right now and go, okay, crypto's the way. It's the only way forward. Once again, I'm not against it. I'm long it. I think it's a great trading vehicle, just like any other trading vehicle. I don't have more belief in one or the other. I'm just saying that the environment looks good for crypto. The environment also looks really, really good for silver miners, especially the small cap silver miners in the junior space. Corn's next. Corn making a 100-day high, 20-week high pictured. And it's up over the 50-week moving average. That's the first time it's been over that moving average, or it's made it's been over the 50, or it's made a 100-day high in a very long time. This trend could be turning around finally. Now, once again, we need to see it sustain a 100-day high. Things hit 52-week highs, 100-day highs, and they reverse at times. It's rare, but it does happen. It is usually a good signal. So if we make this high, I don't mind if we pull back. Pulling back's fine, but really reversing like bonds did, for example, that could be bad. So let's keep an eye on it. Long corn right now. We'll see where it ends up. So now we're at a full position in corn, by the way. We had a half position. Now we're at a full position. Next chart, new commodity regime is coming. So for me, gold is everybody's going. Gold is saying that it's World War III. Gold is saying that we're all gonna die. Like, to me, gold is just saying that commodities are gonna move at some point. And inflation is coming back. That doesn't mean it has to happen in a straight line. It could be we see like 2020. Commodities did start to move, but we saw a deflationary shock before the commodities moved. It could be something like that. I can't tell the future. I can't tell exactly what it's going to be that triggers it, but something is going to trigger it. One way or the other. It's either going to move up or down. Once again, that's a very ridiculous thing to say for people paying attention, but that there is information in that. Meaning, for me right now, I am ready for these commodities to continue to move higher, for oil to probably bottom out, for gold, silver, the precious metals to continue to move, and the softs to continue to rally the way they have. I am ready for those things to happen. But I am also saying that if oil just breaks down here, we have to pay attention to that as well. So as long as the oil holds the level it's at and continues to bounce, I'm okay with it. I think we're going to go long, or I think we're going to be long oil sometime soon if that happens. Next chart, the bull bear indicator is telling us to stay long. As long as we're above the blue line, that means stocks above, it's a percent of stocks in the NYSE, so the New York Stock Exchange, above their 200-day moving average. So above the blue line, we're above 50%. We're way above that blue line for the 200 DMA. That's very bullish. And the next one on the bottom is the short-term indicator that I have, which is we're still very bullish on that as well, which is we're not near the red, which is below 30% on the 50 DMA. And we're still above the 50% line on the 50 DMA. So as long as we're above that, and then breadth is continuing to move higher. Yeah, globally, some things happened recently. It might be based on the presidency, tariffs, all these different things. So globally, some of these stocks look shaky and breadth looks shaky. But in the United States, at the moment, everything looks good. I would stay long. All right, guys. Hope you guys have a good weekend. Don't mind if I post something this weekend on Thomas Paine. It's for me, I like to write. My mind's all over the place at times, as you guys all know, who've been paying attention. And feel free to write any questions, anything, any help you guys need with systems, strategies. Put it in the chat. Like let's all chat about those things. There's a lot of good traders in this group who've been trading a very long time. Some people who don't even really want to be named or known for what they do, but they will write in and help you. It might not be their real name, but they will help you out, and I will help you out. And there's a lot of traders who you guys even know in the group that will help you out and learn things. So feel free to write in. We'll talk to you guys soon.